work, I guess. Those Monday, Wednesday, and Friday episodes are becoming more challenging every week. Well, I still have a lot of people watching, I guess. And you're probably, helping some people, I would think, just by creating financial content for people of all ages, really, but mostly young people. They're just so vulnerable. I don't think they realize the potential they have. Yeah, just by making a little bit of an effort. Oh, hi. Yeah, I was actually, sorry, you startled me. I don't normally have people come into my bedroom like this really late at night. What can I do for you? You've been watching the show. Well, I'm glad. Yeah. How are things going though? You look a little bit distraught. You want me to look over your portfolio? Right now? I mean, it's kind of late. I was really going to be going to sleep pretty soon. And, you should be in bed too. It's almost midnight. Well, this is when I normally produce my show. Yeah. I don't have time during the day. I'm a busy retiree, Yeah. Well, I guess I do have some time right now. Go ahead, take a seat. Alright, well, you've seen this before, right? On the show. Yeah. Do you mind if I just do a little triggers first while we get started? For everybody watching. Just relax. Relax, but don't fall asleep. Yeah, this is my little studio. Do you like it? Yeah. I've got lighting over there. My camera's usually over here. Yeah. This sounds pretty good too, doesn't it? Listen. Wait, shh. Oh. I hope you can hear that. I've been watching ASMR for a long time, like you probably have too. I love tapping sounds. Tap, tap. Tap, tap. Yeah, well, I've got the microphone turned up really high, so I'm hoping this works really well. You haven't been able to sleep. Okay, have I ever talked to you before? No, okay. You know how these things usually start, right? I've got to get some information from you. People like the scribbling and the writing, I guess scribing. So why don't you give me your name? Okay, and what's your address? Shh. Okay, how about a phone number? Seven. How about maybe an email address would be good too, I think. How old are you? 36. Single. Okay. Let me just, if you don't mind, I'll ask a couple questions. What is your job right now? What are you doing? Very nice. What is your current income? That's very good. Yeah. You have no children? No. Alright, so is this a company where you feel like you have upward mobility, or will they be paying you maybe a little bit more every year? Like, talk to me a little bit about the history of your income with this company. Okay, so it's good. You've had really good raises. Do you plan on staying there long? Okay. All right. Did you go to college? Okay, yeah. All right. You've got a really great career ahead of you, so if you can't sleep right now, there must be something going on, because I just met you, but on the surface right now, you've got a good job. You're making good money. Why don't you talk to me a little bit about your lifestyle in terms of what you're spending? And, well, why don't we actually, let's start with your essential expenses. Are you renting or do you own? Okay, so you own. How many years? Okay, 5. What did you purchase the home for? And what is it worth right now? Okay, so it appears you have a lot of equity in that home. What, maybe about 50,000? Okay. For the critical expenses then, if you just, do you know what they are without naming all of them right now? Like, what is the total expenditure for critical expenses right now? Okay, and what is your gross monthly income after taxes, but before whatever you're putting into your investments? Okay, so you take home, all right. And what would you say you're spending every month on fun activities and things that just kind of pop up? Okay. All right, so just by looking at these preliminary numbers, would you agree you have a very good cash flow based on what you're sharing with me right now? At the end of the month, at the end of 6 months, at the end of a year, you've got lots of liquidity in your budget, it appears. Am I right? To the tune of about $1,500 or so every single month. Unless there are expenses or things that you are not telling me right now. What kind of credit card debt do you have, or other consumer debt? You've got a car loan. Well, is that wrapped up in that number? Yeah. Credit card debt. You do? Okay. Oh. That's pretty high. How long have you had that debt? Okay. You've been paying what? Minimum payments? Is that all? Okay. And you've got the car loan wrapped up in that number, but you still have your credit card minimum payments were wrapped up in that number too, yes? Okay. So I'm still seeing $1,500 a month. That just is an individual retirement account that you can, I guess, purchase. I don't know what the word is. I guess it would be, you go to a discount brokerage like Vanguard, Fidelity, T. Rowe Price, I guess that's where mine was in 2006 when I started it. And you fund it, F-U-N-D, with after-tax money that's in your paycheck. So like that $1,500 that I'm showing here, that currently is not accounted for. You could be putting into that Roth IRA every single year. Yes. Well, you can dollar cost average into the market. So when you put the money into the IRA, it's important to understand that you then are going to select the stocks, mutual funds, I should say, really, that are available to you within that Roth IRA. And any of the growth on that Roth IRA over time is going to be tax-free. You never pay taxes on it. But you have to keep the money in the account for at least 5 years before you can take any out, I think. Just Google the rules. There's some rules. But your income is below the threshold of what it is to qualify. Someday, if you're making more money, you won't be able to do a Roth IRA, which is kind of a good thing in a way, because then you can put it into different accounts and you're making more money. In my career, I retired this year, January, never made more than the requirement, so I was always contributing to a Roth IRA all the way down to the end of my career, really. Well, I started putting money into cash vehicles, though, at the very end. That's another story. But back to you for a minute. You will select the mutual funds that you put your money into, and then you're buying shares over time. You can take all of that money out at any time after 5 years. You can't touch the growth until 59 and a half, I think, something like that. But it's such a great deal. Once you max out your 401k, though, so there's kind of like a hierarchy to all of this, really. We don't need to get into all of that right now, but it appears to me that you are putting as much as you can. Well, not really. What's the percent you're putting into your 401k? Okay, 6, which is good because do you get a company match? Yes. Okay. So, the debt, you've got a lot going on. Yeah. So, holistically, or from a general perspective, what it appears to me is that we need to track down all of those monies that you're really spending. Yeah. I've got to build a budget spreadsheet that you could look at. And you're going to track your money every single week. Okay? You're going to deduct it from this spreadsheet. Like, let's say you pay yourself $100 a week for fun or whatever, for food. Once you spend the money at the grocery store, you take that money away from the bucket. Make sense? Then you can never really go wrong. That's where we need to get you into looking at a full year. Like right now, you're just kind of winging it. So, if what you're saying is true, and you've got $1,500 left over at the end of the month, and you don't know where that money's going, then we have a serious problem, really, that we need to tackle. Yeah. Because again, in a nutshell, what I'm seeing for you is we need to pay down the debt. That's number one. You've got the match on the 401k. Great. Maybe we could do a blended approach. Pay down the debt. Start to get to the point where you're contributing more to the 401k. I would probably open up the Roth IRA too, but maybe not fund it to the total dollar amount quite yet until you get the debt paid down. Then the goal would really be to take advantage, most likely, of the 401k and max that out. Maybe in the next 5 years or so. Maxing out, yeah, that means to the total dollar amount that you can put in there. Just Google how much you can put into it. It might be, I forget what it is right now. Because at the end of my career, I was doing catch-up contributions, so it was more if you're over 50. So we would want to that's your goal, to get that maxed out at the same time paying down the debt, contributing to the Roth IRA. And then maybe after 10 years, by the time you're 46 years old, you're still going to be so young, the debt will be gone. You'll be at a point, you'll be making more money. You'll be maxing out the 401k every year, and you'll also be maxing out the Roth every single year. Does that make sense? It might take 10 years to get there, but that's what I did. That's all I did. It doesn't take a rocket scientist to figure this out, really. You just need to wake up. Are you awake right now? Excuse me. Are you awake? Don't fall asleep right now. Anyway, that would be, you want me to repeat it? Just that last part. Okay, we need to come up with a 5 to 10 year plan to get you to where you're maxing out those vehicles. That's all you need to do. Seriously. Pay down the debt, max out those 2 vehicles for the next 10 years. Now, when 10 years comes, let's say you're making a lot more money. You'll be talking to me and you'll be like, Evan, I'm maxing out my 401k. I'm putting in the total dollar amount every year. I'm maxing out the Roth IRA every year. I just continue to dollar cost average in. I'm putting that money into the market. Maybe in 10 years, you'll look at your budget and you'll have an extra $2,000 or $3,000 going on there, right? If you've got extra money then, what I did, I opened up a taxable account. That's an account that you fund with money. It's not a government-sponsored program, but you also fund it with after-tax dollars from your paycheck, obviously, like a Roth. And you would, however, have to pay taxes on the gains of that account when you sell the shares. You pay taxes on the dividends every year of that account because you'll get a 1099 DIV from whatever company you have that taxable account with, but you don't pay capital gains on the withdrawals until you sell the shares. Unlike with the Roth, you don't pay taxes on the gains at all. Make sense? So then you have like this blended portfolio, right? You get older, you'll be 46, you'll be 56. Trust me, you'll get to the point when you're 56, 57, 58. You'll be looking at your accounts. Hopefully you'll be putting in so much money. You might have 500,000 at that point. You might have 600,000 at that point. If you do really well and you stay committed and you continue to make more and more money, rather than getting there in 10 years, as I talked about, you could get there in 4 or 5 years. Then you open up the taxable account earlier and you can sink as much money in that taxable account as you want. You could be a millionaire by the time you get to age 58 or 60. So, like, start, like, right now. Yeah, you're 36. I mean, it's time to get smart with money, don't you think? Excuse me, are you awake? Listen, are you... Yeah, wake up. Yeah, don't be sleeping on me right now. It's not a good time to be sleeping. You have a really good opportunity to do really great things with money. You just need to wake up. Stop watching all of these ASMR videos and falling asleep. You don't want to do that. Do not fall asleep. Listen to this channel. Watch my channel, ASMR Money Mentor. Every day I'm producing videos during the week. Just watch those to stay committed over time. That's all you need to do. I mean, well, yeah, you'll have other things you'll want to do, I'm sure. You know, someday you might want to get married. You might want to have children. You might want to buy a home. We already own a home. But you've got to build that into your budgets as you move forward. So just be smart with your money. Do not throw it away. You want to buy assets. You do not want to buy liabilities. Liabilities are bad, right? You want to put your money in things that are going to grow over time. That's what you want. Did you watch my episode where I had on the net and I was talking about the millionaire next door? No. We'll go back and watch millionaire next door is what you want to be. You want to be wealthy. You don't want people to know that you have all this wealth. You want to do it in a very quiet way. Build it slowly. Nobody will know. You're going to have a very modest home. You're going to drive less expensive cars than your friends. Yeah, you're not going to lease, you're going to own. You're going to keep them for 10 or 12 years. People will think you're poor. That's okay. You're going to know that you're wealthy, right? You can be as wealthy as you want to be as you move forward in your life. It truly is up to you. Find the conviction within you to do great things. Okay? Once you start to see your balances grow over time, that's going to be enough to motivate you. But right now, you just need discipline. It's getting kind of late. So, I think you better be going. Yeah. Was this helpful? Okay, good. So, yeah, we'll come back for more motivation. I'll be here.